This is Terrence Banks with Information Age Financial Solutions, coming to you about the economy. And I'm just going to call the title of this one Financial Illusions and Fake Financial News. But what I'm using as a platform is this website, The Burning Platform. I found an article, Stupid As a Stupid Does. And the content of this article was beyond fantastic. It really shows, it cuts through the BS and the illusions that we've been led to believe under. And I want to read a couple excerpts from it because it just shows the state that we're in and how we're being financially lied to by the media that's out there. Great title, Stupid As a Stupid Does. If you prefer fake news, fake data, and a fake narrative about an improving economy and stock market headed to 30,000, don't read this fact-based reality check article. So again, we've been led to believe that everything is okay. We're going to continue growing. The economy is getting better. We're in a way of growth. A new administration is in. They're going to bring back America. But is that really possible? Let's just come across a couple excerpts that I read from the article that just really showed and really proved the illusion that we're in. This stupendous degree of utter stupidity goes to a new level of idiocy when it comes to the stock market. The rigid, fleecing machine known as Wall Street has gone into hyperdrive since futures dropped by 700 points on the night of Trump's election. An already extremely overvalued market as measured by even historically accurate valuation metrics soared by 4,000 points from the futures low over 20%. I'm sorry. This is what I'm just reading a couple different excerpts that they had from here, and this is kind of giving the Trump euphoria that the stock market reached once he was elected. And he said the current bull market is the second longest in history at 8 years. I mentioned in several different videos that every 4 to 6 years we've had a correction. That's just throughout the history of the United States as a republic. And this is the second longest bull market in U.S. history at 8 years so far. You have the second longest bull market in history, while stock market valuations, as measured by the Shiller-PE ratio and every other historically accurate valuation method, are higher than 1929 and 2000. But the Wall Street hype machine and the business network shills adamantly clear this bull has years to go and thousands of points of upside. Unless we have a hyperinflation, I don't know how they're going to continue to say that this bull market that we're experiencing is going to continue going. But here's a kicker here. Gray bears who haven't been captured by the Wall Street machine honestly point out the market will deliver 0% returns over the next 10 years at these valuations. It's right here. So even if the market continues going up to skyrocketing, you're getting 0 returns over the next 10 years as valuations. Eric Peters' words of wisdom will fall on deaf ears. The longer a market trends lower or higher, the more confident people become that tomorrow will look like today. And what they forget is that the single most important consideration in investing is your starting point. So let's look at the chart that's provided here. Here's a stock, Black Tuesday, 1987. Black Monday, where we at, went down, dropped down dramatically, and where we at now. You would think a PE ratio of the market rising historic highs must be due to corporate profits. Stock market should reflect corporate profits, right? That would seem logical. Continuing to rise and making investors confident about the future. The narrative being flawed by the fake news networks is a strong economy and surging corporate profits are the reason for all-time high stock prices. This is wrong, of course, but they got you to believe that. But look at the U.S. corporate profits after tax. Here's the dot-com bubble, the pre-financial crisis bubble, see how it's dropped down, current market bubble, not adjusted for inflation. We're seeing here it's not actually growing. In March of 2009, it is actually growing. Fed overnight interest rates were at emergency level of a 0.25% basis point. 8 years later, after tremendous economic recovery, Fed overnight interest rates are still at emergency levels of 0.75%. So if everything is going so financially well, why has the Fed only increased the interest rate, overnight interest rates, from 0.25% to 75%? In March 2009 and currently 2.3%. If that was a true economy, wouldn't rates be at these levels? That's a good point right there. Again, I'm kind of mustering through this, and because there's so many things that covered in the article, I'm trying to kind of highlight the importance of it. But I'll encourage you to read it. The Burning Platform, Stupid Is as Stupid Does. Here's another thing that just look at this. The truth in this is the entire bull market has been generated through financial engineering. Perfect terming. I got to read that again. The entire bull market has been generated through financial engineering. A critical thinking individual which eliminates all CNBCs. I'm not going to call people bimbos, but talking heads and Ivy League educated Federal Reserve schmucks. Explains how this stock market recovery has only been Fed induced. And that's what it's showing here in this particular chart here. And it points out in the video. In the article. Step 1 was to temporarily repeal FASB Rule 157, March 9, so banks could value their toxic real estate assets at whatever price they could choose. Good point there. Step 3 was breathing life into failing corporations with unnecessarily low interest rates. By giving these corporations extremely low interest rates, they don't invest in bringing production back in. ZIRP, zero interest rate policy, has also allowed insolvent financial firms, underwater real estate developers, and zombie retailers to refinance their massive levels of debt at ridiculously low interest rates. Again, you're not even letting them get through the normal market cycle of cleansing out the bad debt to bring back the good and get people that's actually performing to be in the market and doing that. We keep pumping this up. That's what he's stating in this article here. Suddenly it all becomes clear. Stock buybacks have been propping up the S&P 500. So what corporations have been doing since that time, because the low interest rate policy that we have in this financial illusion, they continually, you can borrow money and then get paid to put it back and buy your stocks. Why would you invest in capital production, CapEx, and put people to work? I can make profit just by financial engineering and buying back my shares and laying people off at the same time. And this chart shows exactly what I just mentioned here. After you've run out of accounting gimmicks, refinance all your debt, and outsource as many jobs to the third world as possible, how else can you make your earnings per share rise? Why invest your money in a capital innovation, research, and human resources to grow your sales? This is a question. I'm not even doing it. Why invest your money in capital innovation, research, and human resources to grow your sales when you can just buy back your own stock and goose earnings per share the easy way? Again, it shows how this financial illusion that we've been told that everything is getting better. Market is better than it's ever been. Stock market is a reflection of that. It's all financial BS and financial engineering. The stupid it burns. This ridiculous misallocation of corporate funds was enabled by the Fed keeping interest rates so low for so long. Again, you create financial malinvestment when you have things that reflect that low in these interest rates. You punish savers. There's no prudence because everybody wants to borrow and thinks the party is not going to end. This article is beyond fantastic. It's something you got to read if you just keeping abreast of what's actually going on there. It seems the election of Donald Trump and his promise of tax cuts, walls, infrastructure, and fixing healthcare have enthused the masses to investing in the stock market. Now you got regular people who should never be in the stock market right now, coming in at its all-time high, at its all-time peak, and we haven't had a correction in over 8 years, and we're in 2007. We're overdue. As the stupid money goes on, the smart money heads for the exits again. Because the market has been so high, so long, people don't want to miss out. So the stupid money goes in, they put more money in their 401k, thinking they're going to get a better return. And slowly but surely, the smart money is actually exiting out, selling their shares. And you can see that by this chart here. I'm going to click one more part of this, and then I'm going to go. So all these pieces are in place for an epic stock market crash. That's what I wanted to get here. Along with a real estate and debt market crash as an added kicker. Let me read that again. So all of these pieces that I've laid out here are in place for an epic stock market crash, along with a real estate and debt market crash as an added kicker. The arrogant, overconfident 30-year-old MBA investment geniuses and their supercomputer algorithms are sure they are smarter than the next guy and will get out before it's too late. They think they will be a clear event which will signal it's time to go. The markets are so overvalued, so dependent on the Fed, and so propped up by mass amounts of leverage, they will topple on their own weight at any moment. At any moment. It's just the data reporting last week will be the gasoline thrown on the fire when this market starts to burn. This article is a must read. Again, I'm just covering highlights and skipping around. But if you're tired of financial fakeness, this is the one that puts clearly in charts and broken in plain language of what we're facing and the ridiculousness that we're supposed to believe as consumers, as Americans, and this is everything else, that everything is fine, we're going to be okay. We're ready for a stock market crash and correction, and this financial illusion will come to an end. No one really can say the exact time, but the odds are setting up for definitely one this year. I will not be surprised if we make it before the end of this year without any kind of correction. This is Terrence Banks. Until my next video, keep aware of what you're doing financially. Be abreast of what's going on in your financials. Until my next video, I'm out.